welcome to Money Making Sense, the show that if money affects your life in any way whatsoever, we're going to talk about it. This week we're talking still 10 tax tip series. Joining me is Paul Gibbons. You are with Jones
Simkins. Yes.
Jones Simkins. Okay, so we have Paul Gibbons from Jones Simkins, and we're going to talk today about how to get rid of those kids, right?
Yeah, that's one way to look at it, I
Yeah,
suppose.
right. I won't have to pay money for them anymore if they're just gone.
That's what some people say. Others say they just keep shelling it out. So.
All right. Well, actually, we're going to talk about how dependents operate on our taxes. So tell us a little bit about what we need to know, or what do we need to do to prepare our taxes if we have dependents?
Well, I think the big news is with the tax law change, this in 2018, dependents used to be kind of a big deal for exemptions. You used to get roughly a $4,000 exemption.
Yeah.
That's gone away. So exemptions now are no more, at least through 2025. And so when you talk about your dependents, you're really interested in talking about the child tax credit because there's really no benefit from a deduction standpoint in having a dependent on your return.
Okay. Let's back up a little bit. What's the difference between a tax credit and a deduction?
Great question. So the exemption used to be a deduction. So if you had if you had income of $100,000, you could take $4,000 roughly per child off of that income to arrive at your taxable income number.
Okay.
So that's a deduction. So now you can't do that, and so that $100,000 would flow through and become taxable, and then the tax would be calculated, and once the tax is calculated, then you can determine a credit to offset the tax.
Okay.
So credits are more valuable than deductions.
Oh, they are?
Much, yeah.
So actually people with children might prefer the credits over the deductions.
The new law for young families is pretty great, yeah.
Oh, okay. So is there a standard credit? Or, I mean, if I have one child, do I just get one credit? Or, I mean, what is that going to look like on my taxes?
Yeah, so it depends on the age of the child. So as long as the child is under the age of 17, you can get a $2,000 credit to offset your tax. So it's pretty powerful. It used to be $1,000. It's now $2,000. The other really neat thing for some lower income taxpayers is that the refundable portion of that credit is $1,400, and so you can get a larger refund even if you don't owe the tax. So if your tax is less than the $2,000, you could get still a refund of additional child tax credits on your taxes.
So will I get that $2,000 credit no matter what my income, or is that the maximum credit you can get?
So that's the maximum credit,
okay.
and it used to be pretty limiting. If your income was just over $100,000, that credit started to be pared back. But now with the new tax law, as long as your adjusted gross income is $400,000 or less, you can get the full credit.
Okay. So what about somebody making $50,000, $60,000 a year? Do they get the full credit?
Yeah, that's
okay.
That's a typical young family situation where someone's making $50,000 to $100,000 and maybe has 2 or 3 kids. In that type of situation, if they had 3 children, they'd get $6,000 as a credit against their tax.
Wow. So it's not until you hit that $4,000 income level and above that credit starts decreasing.
The $400,000, yeah. So
okay.
And then it starts to decrease, and it's totally gone by the time your income hits $600,000. So
okay.
Those darn high income taxpayers.
I'm kind of guessing by the time you're making $400,000 to $600,000, you really don't need that $2,000 credit, but that's just me.
Yeah, it's we like to get everything we're entitled to, though, and it doesn't change. Your mindset doesn't change whether you're making $50,000 or $400,000 or $600,000. You still want be efficient and effective on your tax.
That is true.
So.
All right. Anything else we need to know about dependents and our taxes this year, especially with the new tax law?
That's the main thing. That's the main change with dependents and for this year. So.
What about if we have dependents that are going to college? I mean, how does that? Because you said if they're 17 and younger, we get that. What if they're 17 and a half? But they're still living at home, like they haven't turned 18 yet.
There is one other change.
Okay.
Good question. You sparked my my recollection. So, as long as the dependent is under the age of 19, with the new tax law, there's a $500 credit. It's $2,000 until they hit 17, and then it's $500 until they hit 19. And if they're a full-time college student, it's $500 until they hit the age of 24. So. As long as they're a dependent and full-time college student, you can get a $500.
So if someone's
credit.
On the 5 or 6 year college plan, they can still get a credit on their parents'.
Yeah, until they hit 25, and then it's lights out. Then it is time to kick them out the door. You know?
Okay, great. Thank you so much, Paul Gibbons. You're with Jones Simkins.
Right.
And if you need your own CPA, go to uacpa.org to find the one that's right for you. You'll be able to listen to KSL News Radio every week to get more information on finding the correct certified public accountant.
Thanks for being a Money Making Sense listener. Follow your common sense onto social media. Money Making Sense on Facebook, Twitter, and Instagram.